All right, so we are live. Again, welcome everybody to the Sunday, June 28th equities and general economical discussion call. We have Faisal, our equities analyst, on the call, and our guest speaker, as always, Austin Ashraf, on the call as well, ready and willing to discuss all the things that have happened in the past week and what we have coming up for the week ahead. How are you guys?
Hi, everyone.
Doing good, man. Hope y'all are doing well as well.
Yeah. So, guys, what's going on? How was I want to get a recap of both your thoughts on the past week. I'll let Austin start off.
Well, basically, last week I said that I had taken down my long exposure tremendously, and I thought the market was way overbought. And as the Fed has taken the foot off the pedal slightly, it would create some sort of selling or a profit-taking environment. But I continue to be in that camp that I don't want to be considering what is happening out there in the economy and in the world. I don't want to be too bullish, and I don't want to be too bearish. So I think you have a trading range, and as the opportunities come about, I intend to use them.
And can you actually elaborate on your trading range? Are you looking at specific indices, or are you looking at just maybe the Nasdaq or the IWM ETFs, or what?
No, I'm as far as I primarily trade Nasdaq growth stock. So but you do pay attention to S&P. I think S&P will probably trade down below maybe around below 2,900 or so, and it'll find some sort of support. But again, the bottom line is the Fed has the Fed keeps telling you that they have your back. They said if the more trouble arises in the economy, they'll print more money. So
yeah.
So that's something you always want to keep in mind.
I actually want to touch upon that a little bit, but I'm going to let Faisal go in terms of his review of the previous week.
Yeah, this week was pretty much, regardless of what you saw in the headlines. I think what did the S&P closed, so it was down 3%. But you had stocks like Apple continuously make new highs. You had stocks like DocuSign up 10% for the week, Avalara up 10% for the week. You had a lot of these high growth players continue to buck the trend of the entire market that seemingly was dragged down by not only the airlines and the bailout sectors selling off, but also some of the industrials, housing, and I think a lot of the financial selling came on Friday. But basically, those sectors in the market continue to drag down the entire indices. So it really painted a picture for me that there could be some discounting as far as the second wave, and we may start to get into a theme that we saw in later March, or I want to say later March, during the initial stages of the recovery, where you start to see the work at home stocks outperform. I think Activision. Let me see what Activision and Take-Two. Activision was only down 0.24%. This is another coronavirus advantage play. You're starting to see these stocks largely outperform the market once again. So that's not to say that I expect another market drawdown to happen, because as we touched a little bit on Friday, a lot of these stocks that had gone up, there's this narrative that I keep seeing that's so euphoric that stocks only go up, it's just continuously going up. And I think people just always look at the headline index numbers, and that's not true. I mean, for the people who are buying UAL as a sort of recovery play because they probably thought it was a pure V-shaped recovery, you do know that stock has gone from $52 to now $32 in the span of 3 weeks. Same with Southwest Airlines, gone from like $40 to $32. We touched on the casinos. Las Vegas Sands has dropped 22% since that June peak. So like there's not, even though I keep seeing this euphoria on my Twitter timeline and everywhere else, I think the sectors that are the most affected are properly being discounted as a result of all these cases spiking. So it's interesting to see how things play out. I think technically we're at a pretty strong support level. I do expect this market to be a good to have a good week this week, but I think we'll definitely know Monday if it's going to be an up or down week. I think they'll either break below the support Monday if they really want to take this market down another 4 to 5, 6%. But if they hold it Monday, I think that's a very good chance that we may start to see a continuation back up to those mid-June highs, and that would probably be our trading range for at least as long as this second wave continues to play out.
Okay, perfect. So it seems like you're kind of on the same page as Austin for the most part, where you might see, or I guess you're waiting for maybe a bit more drawdown, and if it does come down, you're expecting maybe 3 to 5% more.
I like if the market breaks down from here, I'm gonna be honest, I actually don't know where we could take this market at, because if I'm assuming that the market's going to break down from here, I actually think you're going to see tech as well as the high growth stocks start to come down and break down, as well as the value sectors. And when that happens, I think that creates a lot of uncertainty, at least from my perspective. And that itself, the profit taking that could happen in those sectors could be enormous because they've gone up so much. So I want to say the market would come down 5% or whatever, but I think it could come down even 10% or something like that. We could see a massive profit taking in the main sectors that have held up this market, along with the continued weakness of the value sector. So combine all that together, I think I don't want to make an exact guess, but I think 5 to 10% is normal for like a 2-week drawdown if those factors do end up occurring.
Okay, perfect. Good to know. Now, there's a point that Austin made about Fed having the back of the stock market effectively. So this question is for Austin. Do you think that utilizing this information that we know about the POMO market operations, where the Fed is effectively going in and into the market and buying, do you think that that itself is a trade that traders and investors are looking at or could look at, where they just effectively follow the POMO operations or the Fed balance sheet and they say, well, okay, I mean, if Fed has our back, why would we not perpetually just be long?
No, I agree with your latter statement that bottom line is that Fed keeps telling you over and over and over that they have plenty of tools in their toolbox to remedy any situation in this pandemic situation. So look at M2 money supply. I mean, just unbelievable liquidity in the market. So that, and I totally agree with Faisal that over the next week or so, we could see a quick 10% correction in the market. And again, this market, if you look at how this market is trading, these tech stocks are not correcting. Actually, they're making new highs in this environment. A lot of these tech stocks are making new highs, and so you have to be a smart investor in a sense to build the portfolio that is going to companies that are continue to grow their top line and bottom line. So and those companies are found in the tech sector. So I would say that don't be too bearish and don't be overly bullish.
Okay, fair point. I want to move on to obviously just talking about the general characteristics of what's happening in America in terms of coronavirus. Are there things that are worrying you about the cases rising, Texas sort of going back into its defensive posture of maybe rolling back the phased opening, are these things of concern to you in terms of how they relate to the stock market, or do you think that this is largely sort of blown over um, in terms of what the damage could be done in the market itself?
I always thought that as the economy reopens, it's not going to be a smooth sailing. You're going to have, uh, ups and downs as the new data comes about. So it's not surprising to me. What I am most concerned about in the market is a market has not sort of discounted uh, the election results, and not that I'm a fan of Trump, but he has given a lot of free money to the corporate America, you know, and they love it. So if as we get closer to the election time, and and it looks like the Biden may actually come out ahead, market will react to it, and to me that would be another great opportunity to buy.
Yeah. Um, Faisal, any thoughts?
Yeah, no, I agree with Austin. If there is, I think the likelihood that we're going to see some selling as a result of the election, because I think the polls I mentioned it Friday that came out recently, they were really showed Biden ahead in a lot of key states and ahead in a lot of key demographics. And I think that, I mean, I know he's not the perfect candidate, but I still think that he's got a better shot at winning at this stage. So I think the market will at some point discount that, even if he doesn't win, they're going to discount it at some point. I think based on the data that I'm seeing before that election. So yeah, at some point you'll get that pullback, and like Austin said, that will be another great buying opportunity because, well, once again, it'll be a great buying opportunity for certain sectors. Um, I think if you're in the aerospace and defensive sector, that is not a buying opportunity. I think that's something that remains to be seen because I think if a Democrat's in charge, the first order would be to cut defense spending, and that's not good for these defense stocks. So there are a couple of sectors that I'm looking at that if the market pulls back as a result of Biden winning or the market discounting Biden winning, I'm not going to touch. But for the most part, like these tech stocks, if you get any type of pullback in them, once again, they still have a lot of penetration left in their addressable market. So those are the stocks you want to buy. And I'm not talking about the Apples. I'm not talking about, well, I mean, you could do Apple, actually. You could do Microsoft, but the real opportunity will be in the small growth, mid cap, high growth tech stocks in the software space, specializing in AI and 5G. I think the cloud stocks are getting a little bit too overzealous in terms of how much market share they can attain. It seems like everyone's gonna get 20% of the market share, and there's like 100 players, which doesn't make sense. But definitely focus on the themes of AI and 5G to be the main drivers for small and mid cap growth tech if we do get a pullback.
Okay. There's another thing that what I wanted to talk about is commercial real estate. Now we've discussed this topic, I think at a distance, but it seems like we're getting the numbers of. I saw Manhattan real estate. Seems like Manhattan offices saw their rents plunge about 26% in this prolonged downturn. We're also now seeing other companies and other offices starting to realize that maybe this whole experiment of working from home is more successful. I have family working in Indianapolis and Indiana, and they also start talking about their company itself is starting to close down some of their offices and become more prepared for the work from home process for the foreseeable future, or maybe just a dynamic change in the company. So with all this closing of these offices, Manhattan offices seeing their rents plunge, obviously coronavirus being persistent, I'm pretty bearish on the commercial real estate market. So as someone who's a bear on the commercial real estate market, how does one play this side, this directional bias? Austin, I'd like you to answer that.
Well, there's the obvious, and I totally agree with you. And and this trend is nothing new. This trend has been developing over the last few years, actually, as our broadbands keep getting better and better. A lot of people are finding much easier to work from home or offsite, and you could see the office occupancy has been in decline for quite some time, and I think it will start to exaggerate now. And some of these REITs that own a lot of commercial property, you know,
What are some tickers on the REITs?
I don't have it in front of me, but I've been looking at some of these REITs. You could actually Google some of this commercial real estate REITs. There's a whole slew of them.
Simon Property.
Simon Property, Carlisle,
Store.
and these are some very big names, and so I think you will have a situation where in not so distant future these guys will have to convert all these office space into condominiums or something, and so I'm totally in that camp that future for commercial real estate looks pretty grim.
Faisal, what are your thoughts on that?
Yeah, I think exactly what Austin said. It's been on the decline for some time, and it mainly started with the shift that we saw in the retail sector. I remember the first company that was really hit by having a lot of brick and mortar stores or expanding brick and mortar was Michael Kors. A couple of years ago, Michael Kors used to be one of the hottest names in fashion and definitely was one of the hottest stocks in the market. And then the market started to sour on it. Why? Because their growth expansion plan really involved building more stores and becoming more of a brick and mortar player rather than an online player, like a lot of analysts saw the future of retail. And as we kind of see now, the analysts were right, Michael Kors was wrong. So you've started to see that shift definitely in the retail sector as companies are like, we don't need to have as many storefronts. We just need to build the online business more so. So I totally agree with it. But the office space, I'm still waiting to see how things play out because I think as these companies, as the large corporations that inhabit these big corporate offices, I think they're only going to grow. I think they're going to add more jobs and they're going to be more remote jobs. I don't know if necessarily a lot of jobs are going to be taken away and moved to remotely, more so than just a raw addition of new jobs. But yeah, I think there's a lot of grimness in the industry, but I think during this time in the uncertainty, I think this is maybe a chance where I would take a shot on it just because everything is looking so grim right now. The companies that are well managed and that have the ability to take advantage of a lot of these retail spaces that are going to be vacant, like I'm in Blackstone. I think they have a very smart management team. They're not totally commercial real estate. They're very diversified as far as their portfolio. But I think a company like that will definitely take advantage during stressful times like this. But I understand the theory of the theory of commercial real estate and commercial office spaces. Yeah, it makes sense that the trend, at least at this point, is shifting towards not going into the office and more so creating jobs away from the office.
Fair point. I want to discuss this tweet to sort of further, talk about the conversation of what industries are being impacted, as well as how has consumer habits, as well as consumer spending changed. So Gregory Dacko put out this this chart. He's talked about how consumers are largely still fearful, while we do see a 8.1% rebound in real consumer spending, which was the largest ever. Level of spending is still 11% below February, with major shortfalls spending on clothing, healthcare, recreation, food services, accommodations, and autos. I want to touch upon autos a little bit more, but first of all, what are either of you thinking regarding this kind of data?
Yeah, it makes sense. It totally makes sense. I mean, when you're having people not even want to go to the mall, they're not going to be buying clothing or food services as much. The takeout numbers that have come out, takeout ordering has gone up, I think, to around 80 to 85%. So that's good. But we all know the real money is made when people go inside and spend money on alcohol. That's where the restaurants get the majority of their profits. So that's still a big gray area. Recreation, that makes sense because people are not wanting to. First of all, people are saving a lot. People don't even want to go out and go to things like Disneyland, not just because of the coronavirus, but because this is just a mentally restrictive environment as far as people don't want to spend on non-necessity items. And then I think autos was one that really surprised me because of the initial data that we got in China. I was really expecting a sharper bounce back in the auto industry, at least here. And so far, it really hasn't come to that fruition.
Mhm.
I think that's the only one that I could say that really took me off guard. But everything else, yeah, it makes sense. But a lot of these prices and these stocks, I don't know if they're reflecting an 11% discount. I think they may be reflecting even more of a discount.
Fair point. Austin?
Yeah, but I agree with what Basil's analysis is that, you know, people don't have that many options or opportunities to go out and spend money at this stage. So the consumer spending is it's likely to be down at this stage. But you know, I still think that these guys, majority of these people, you could see the savings rates continue uh, to be very strong, and at some point, you will see that money move back into the economy. Uh, so you know, we're going to have fits and starts as far as this uh, reopening is concerned. Uh, you know, so to me, as far as you know, any sell off in the market is it's still a great opportunity to buy some good stocks.
Yeah. So last point I just want to touch upon is the auto sector. I've had some controversial ways of looking at the market recently, just to be able to look at, okay, well, we see definitely the world is moving towards the idea of working from home, more online seminars and presentations and conference calls, etc. We also see that the travel in airlines has declined significantly. I'm surprised that people are not also thinking that the auto industry would not be hit significantly as well. Any thoughts on that? Because I'm kind of thinking, leading towards the idea that I'm, a little bit more bearish on the auto industry.
Well, I'll say a direct point to that because I was someone who was pretty positive on the auto industry going into this recovery cycle, largely because just like what we've seen in housing, this shift of moving into highly populated areas, into the suburban neighborhoods, that shift, I think, can kind of directly be correlated to the auto industry. The people who were in the city probably did not need a car. Now that they're moving out of the city and may have to commute or in the suburbs, things are more spaced out, they would need a car at that point. And so with a really liquid pre-owned car market, I thought the numbers that we would see would be a lot higher, and maybe they may get a lot higher down the road. But I think just as I was saying before, the correlation that we've seen from this shift to moving out of the densely populated cities would have helped spur car sales, in my opinion. So I'm still waiting to see that. I'm not totally negative on the auto industry just yet, but it really hasn't met my expectations.
Okay. Microsoft announced that they're taking that new approach of pretty much closing down their retail stores. I don't know if you guys caught this news, but I thought, again, this is another big blow to the commercial, rental or commercial space in the real estate industry. Mm-hmm. Any thoughts on this?
I mean, it's a same old thing. More and more people are finding that having expensive retail spaces, it's not that productive. and people can easily, the brands that are well known, people can just easily go online and order what they need, So I think it's pretty smart of Microsoft to do that. As these companies are looking at the bottom line, saying, "Hey, how much is it costing me to have all these expensive real estate versus putting more money developing online?" And it seems like a no-brainer.
Okay.
Yeah. I just want to touch on that. In my opinion, Microsoft stores, like I don't, I've gone into a couple of them. For some reason, I always thought they were spaced in very good areas. Like I would really think, at least in Texas, where I've seen them in, they were always in the highly populated areas. They weren't like in like Apple stores where they could be in the middle of somewhere or like a hub and everything is kind of built around them. No, they placed themselves in very hotspot areas. And the fact that they were not able to see traction to the point where they would want to keep some stores, I think it's really indicative of the overall foot traffic in America and how much people are going into these brick and mortar stores. Because I think Microsoft had very premier space to market on, and if they're not able to do it, I just don't. It just really paints a little bit more negative of a picture, and that could be due to their brand. I don't think people were, when Microsoft first announced they were doing these Microsoft stores, I don't think I really ever saw them pick up. So that could be something, but definitely they put themselves in the right position. And the fact that a company like Microsoft failed to capitalize on those really key real estate areas, I think it's a bad sign for brick and mortar altogether.
Yeah, that's a great point. Just to add on to that, one other thing that I thought of, as you were saying, that Microsoft is usually positioned in well-to-do areas. Same thing with Apple. Same thing with the more luxurious malls or city centers that we're used to, right? And with the rise of the Amazons of the world and with the rise of more online shopping, I definitely see more of a destruction in malls, right? Malls and with that commercial real estate. So it goes along with our entire point that brick and mortar stores and commercial real estate, either case, are going to get hit pretty hard. And life, as we kind of know about, going to malls or going to brick and mortar stores, will definitely change post COVID whenever that happens.
Sure. Yeah, I just want to add on to that real quick. Like, this is just my own personal theory, but I think malls, they're not going to be places where you go in to buy clothing or anything like that. They're going to be event-driven spaces. Like we have a lot of these event-driven businesses, like Escape Room, where you go in with a bunch of group of people and you try and escape this room with clues or different things like that. I think over here you can throw axes at like a bullseye. That's something that a couple of my friends have done, and people enjoy it. And I think you're going to see this just huge shift from having retail stores in malls to having event-driven businesses, and that'll bring on a new wave of entrepreneurs and businesses that I don't think we can imagine right now. And I think that shift will happen pretty fast, though. I think within the next 5 to 10 years, as malls just need to diversify in terms of what they bring people in for.
Yeah. There's two I guess one controversial idea that I have, and I want to definitely get Austin's as well as Faust's thoughts on this, is Facebook. Okay. We've seen recently, obviously, the controversy of Mark Zuckerberg effectively not policing Facebook in the same way that he should, where content on it, whether it be lies that are spread or the president himself, sort of tweeting, quote unquote, violence or aggressive, aggressive verbal language. He's gotten a lot of criticism from a lot of people. And not only that, companies have actually started to react. I saw small businesses post on Twitter that they're going to stop ads on Facebook. Unilever stopped posting ads on Facebook, they said. Coca-Cola is doing so. Ben & Jerry's is doing so. Patagonia is doing so. In the near term, I'm getting a little bit more bearish on how Facebook is going to be positioned due to this whole political strife that it's kind of entrenched in, as well as now corporations realizing that they can also have a moral take on how they decide to spend their money, especially when it comes to companies like Facebook who may not have the same morals. So I guess what are your guys' thoughts on that?
My take on that is it's that as long as Facebook has this unbelievable MOUs and such a command over people's lives, that people are hooked on them on Facebook, and as the world keeps getting more prosperous, almost, I mean, it's hard for me to believe. I go into some of the remote villages, and people who can't even speak English, I see them using cheap smartphone, and one thing they want to do is go on Facebook. So for a lot of people, it's very addictive. So I still think that don't be too bearish on Facebook until there is an alternative, and I don't see one. People have, I asked my wife, I said, geez, hey, yeah, what do you think? She spends almost, she told me a couple of hours on Facebook a day, and I said, you're not, you have no qualms about what's going on as far as Facebook policies are concerned. She goes, yeah, I don't like it, but that's where all my friends are, and that's where I get all my news from. So my take is that let the stock sell off, and you want to actually buy the stock. I mean, it's advertisers do not have a lot of alternatives online.
Yeah, I think that's a great point. And by the way, I don't think I meant to say that I'm bearish on Facebook like perpetually. I just meant for the near term, as we see this kind of news developing about Mark Zuckerberg, and his indecisiveness about how he wants to regulate, quote unquote, the content, and then advertisers obviously pulling away, because for the most part, I mean, Facebook doesn't really have too many revenues for income, right? I mean, ads are pretty much one of the largest parts. So you would figure that near term, it would definitely be bearish. And obviously for the long term, I mean, I don't see any problems that Facebook is going to face, nor do I see any competition that's coming up anytime soon. But the near term, I'm still thinking that it could be in a buy the dip mode, in the next few weeks or maybe even a month or two.
The greatest,
Go ahead, Austin.
Let me make this comment. The greatest strength of Facebook is more than advertising. Facebook is a data mining company. They are the greatest invention in the last 300 years as far as mining data. And that is so valuable to advertisers. So valuable that no matter what the one says, they cannot walk away from Facebook. Especially the small businesses are so dependent upon Facebook for advertising. Small businesses are shutting down their physical stores and increasing their spending on Facebook because of the response. They're being more productive by making the switch, and we see this data all over. So I think that let this game play out and let the stock come down.
Yeah, fair point. Yeah, so like I said, just going along with Austin, I do think Facebook is an amazing company. I don't see any player in the market anytime soon coming up to rival Facebook. But my thoughts were in the near term, I'm definitely a bit more bearish because I still think it could be pulled down due to advertisers leaving, sentiment maybe changing a little bit with Mark Zuckerberg getting all this slack from other shareholders and people. So Faisal, you had some thoughts?
Yeah, I just want to say, Facebook is a buy as long as it's above 200. I think the value of their ads is just it is too high. And even the companies that are pulling out now, I don't think they're going to be pulling out forever. I think this is only a temporary thing until maybe they see something that Facebook likes or something. I don't know. I just think it's more of a headline thing that these companies are doing. But I don't think it's really for the long term. I will say, as far as competition, I think Facebook does have competition. Facebook, and I'm not Facebook the application itself, but its biggest growth driver, Instagram. Instagram, I think personally, is probably going to be threatened by TikTok. I think it already is. And at some point, just based on what I'm seeing in my world, um, the people who are on Instagram a lot more, they're now converting a lot of that time onto TikTok. And I think TikTok itself is a funner app. It's an app that you spend more time not only to learn these different dances, but their ability to generate content. Like my girlfriend uses it all the time, and you know, I look at the content on that, and it's so fluid. It reminds me of what made Vine, you know, that 6 second app a couple years ago. It reminds me of what made that app so special. Unfortunately,
Yeah.
it couldn't make any money, so it went away. But TikTok itself is, once again, just like Facebook. I think they are a massive data mining company that we really don't. You know, it could be good or bad, but we really don't know the full extent of how much data they're actually collecting from their users. And I think when they have that good of a core product, I think it really takes away from what Instagram does best, which is connecting with people through a visual platform. And TikTok, I think, is slowly but surely taking away hours from Instagram. And I think at some point that may end up, you know, coming on the analyst headlights, and analysts may start to get negative on the stock because Instagram has been their main grower for the past, I don't know, like 2-3 years. It's been a fantastic grower for Facebook. But if that stops growing, I wonder how this stock will react.
Yeah, that's I totally agree with you. Although I think Facebook and Instagram have definitely gotten a audience of the ages that are a little bit older than TikTok, which is more so of a Gen Z based, in my opinion,
I agree.
app.
I'd agree.
Yeah, so I think the demographics are a little bit different, and I do think that it's quite possibly, you know, the fact that first of all, Facebook owning Instagram and WhatsApp, and Oculus and all of these other small companies. I mean, they have a huge edge. But I do agree with you that TikTok is definitely potentially taking away attention from Instagram, which is again nowadays the main metric that you want to focus on. You know, the attention and the time span that users devote to a particular platform. I want to move on a little bit and talk about some new things that are coming about, because you know there's so much happening in the world, and I think Austin and I know Faisal, of course, you guys keep up with a lot of innovative technologies and things that are happening, how you could invest and, you know, take advantage of that. Last week, for those of our viewers, if you didn't get a chance to listen to our conversation, we talked about SPACs last week, which are the special purpose acquisition vehicles. And this week, what I want to talk about is Samsung and eGPUs. Samsung specifically because I was reading about, you know, how they are really diving into the 5G space, where they're trying to help optimize and create these antennas as well as these maintenance workarounds with drones and AI. I don't know if you guys heard that news or not, but do you think that Samsung itself is a big player in the 5G space? And if not, who do you see in the 5G space that is worth taking note of?
No, I read the same story, and I think 5G the 5G is coming along faster than people think, and this technology just continues to get better and better. So I'm very positive. I think that this is the next big boom in the tech area that you're going to see as 5G takes over, and 5G is going to change the world as we see. You know, you were talking about the auto industry. This is going to dramatically change the auto. You're going to see autonomous cars on the road much faster, and you're going to see a lot of changes that we can't even imagine. So I think that 5G technology is going to use lots and lots of semiconductor, and as they build these towers and to deploy the signal. So the companies, to me, I think I mentioned it last week too. It's that TSM is a foundry. So no matter who wins, they will primarily have to go through TSM, and it's a well-managed company. They don't have a lot of competition. That's a good company to take a look at. Skywork is another name. They make a key component for 5G cell towers. I don't and who else? Marvell is another one. Vago is another one. So there's a whole slew of semiconductor companies that are very well positioned as this 5G is developed.
Yeah. Faisal, any thoughts on that?
Yeah, I mean, everything pretty much Austin said. I think I'm a little bit more down the line. I think people are valuing 5G too much too early on. I think there's a lot of steps that need to be done in order to fully get the full power of 5G to the point where we can have autonomous vehicles or different smart solutions. I think that road may take 1 to 2 years, and things are already being priced in as if it's going to come by the end of the year. So I think there's some disparity in that, but I'm definitely willing to be proven wrong on that. That's just a feeling of mine. I will say this week, Micron is also a company that I'm very high on. I think there's a lot of innovation in there, even though they're largely a flash memory, a memory player. They're not really more so in the 5G space, but their CEO has made a lot of comments and talks about being an innovative player within 5G. And that stock reports tomorrow, I think tomorrow after the market. So I think everyone should maybe pay attention to what they say about their 5G plans in the earnings call, because this is a stock that, in my opinion, is trading at a pretty nice discount. And if they can give some good color on a growth avenue like 5G innovation, I think you can see this stock definitely explode for the next year or 2 years, as it's one of the few semi 5G related companies that has not seen really an all-time high along with Xilinx.
Yeah, and I'm glad you brought up Micron, because I know you've been talking about Micron and their earnings call coming up Monday in our Advantage side. The other thing to note on Micron is on Thursday, June 11th, there was some notable buying of 46,000 contracts for $60 calls expiring July 17th. So for those of you who are paying attention to Micron, just an important data point that you may want to pay attention to.
Damn, that's a lot.
Yeah, it was a pretty significant surge.
That's only for 2 weeks. Wow. So they're really expecting, I think I'd view the option upside thing, the near-term options, the ones that are expiring this week, I think they were only pricing in a 5% move. But man, those options over there are pricing in a huge, 25% move within 2 weeks. That'll be very interesting to see. And I think there's a lot of short interest in the stock as well. So maybe that's also being calculated in. If there's some really good noise. Or I'm sorry, go ahead.
No, I was just going to mention to your point of short interest. So short interest has increased by 7.6% since the company's last earnings release, while the stock drifted higher by about 8%. And then it looks like the options traders are pricing in about a 4.6% move on earnings, and the stock has averaged a 8.4% move in recent quarters post earnings.
Yeah. I don't know why they would kind of underprice it in, but yeah, that's what I saw too, around a 5% premium in the options. So it's really different because it's not going along with history, and it's not going along with just how volatile of times we live in now. But it'll be interesting to see if that dude who bet all that money on the 60 calls ends up making it there.
I know. So for our viewers, you guys definitely want to pay attention to Micron come tomorrow and going into next week. Let me see. Last thing I want to talk about, just something I was reading upon is external GPUs. So as we kind of get into this world of more online conversations via Zoom, doing these TikTok videos, more video quality production. A lot of people already have their laptops and their desktops and computers that they're already pretty happy with. Now, of course, you could go out and buy a new computer, but there's this not a new technology, but rather a technology that's available, which is the external GPUs. What you effectively do is you can just plug it in on the back of your computer or your USB port, and it takes on the processing power of what your video content would effectively impact on your CPU. So your external GPU takes off that load that your regular computer could deal with. Now I have two laptops in Columbia, both MacBook Pros, and one of them actually is about 2 or 3 years old. And whenever I start doing these hosted video contents and seminars like we're having right now, my laptop gets a little hot, and I can feel it like my computer itself is slowing down. So just an idea that I wanted to present to you guys, that these eGPU products, which again kind of tie into the semi space, are going to start adding more and more value. And some of the big eGPU players are companies like NVIDIA, AMD, Asus, and a few others. So have y'all heard of this at all, or is this something new to you?
Oh yeah.
Hello?
Yeah. No. Got it.
Or Austin, I think your mic is a little distorted. We can hear a lot of noise.
Can you hear it better? Can you hear me better?
No. I'll let Faisal answer till Austin fixes his mic.
Yeah. I've heard of.
Let me see here. Are you guys experiencing any different noises? Those of you who are watching on YouTube and Zoom. Sorry about the technical difficulties here. Faisal?
Yeah, hello?
Yeah. Yeah, for some reason your mic keeps cutting out. And let me see. Austin's mic is Austin, can you talk?
Yeah. Can you hear me now?
Yeah, the sound. Okay. I guess the sound is good. Okay, yeah.
Austin, you can go ahead and answer the question.
Okay, what were we talking about?
We were talking about the eGPUs and how they're going to potentially be another segment that we want to pay attention to, especially given the fact that they're part of the semi space as well.
Yeah, absolutely. So once it's these products will require a lot of they're semi and software driven. So it's another market that is going to be very significant, because I certainly think that this teleconferencing thing is not going away. I think it's going to keep getting bigger and bigger.
Okay, fair point. Faisal?
Yeah, I pretty much agree with that. I think it's a product that needed to be done. It needs to be done for modern day laptops for sure, because I have the same problem exactly like you do. But I'm sure having that eGPU would definitely eliminate that heat or the amount of power that this computer is doing, even when I'm watching something like Netflix. So I think you're exactly right. In both NVIDIA and AMD have solutions exactly in that area. But I think it's specifically, I want to actually use the product before I want to give an opinion on it. So I guess I'll just wait and see. Maybe I'll try and get one sometime soon, or use one of their services.
Okay. I think that pretty much ends this conversation where we discussed just a general macro look on the market. If you guys want to join the Advantage side, you can then get the second part of this interview where Faisal, Austin, and myself discuss the individual positioning in the market. Until then, thank you guys so much for joining. Those of you on the free side, the Advantage members, just hang tight, and we're going to just disconnect here, and we'll have the Zoom session talk about our positioning. So let me see.